Hey, what's up everybody? It's 11 Plus here. Today, we're talking about building long-term wealth and passive income with monthly dividend ETFs. It's like getting a paycheck without actually having to work for it. Now, we are going to be looking at my top 3 monthly dividend ETFs for 2024, and beyond that, can help you generate some serious passive income. Alright, kicking off our list at number 1, we've got the Invesco S&P 500 High Dividend Low Volatility ETF, ticker symbol SPHD. This ETF is designed for investors who are looking for a combination of high income and low risk. This ETF focuses on companies within the S&P 500 that have a history of paying high dividends and have low volatility. Essentially, it aims to provide a steady income stream while minimizing the ups and downs typically associated with the stock market. You want something stable, especially in this market. Stability is key when you're looking to preserve capital and generate income without taking on too much risk. SPHD cherry-picks companies with the best dividend track records and the least amount of price swings. This means you're investing in companies that have proven their ability to generate consistent income over time. We're talking about companies like Altria Group, Kinder Morgan, and AT&T. These are well-established firms with a history of paying reliable dividends. SPHD boasts a dividend yield of over 4%, more than 3 times higher than the average S&P 500 yield. This makes it an attractive option for income-focused investors. For every $100,000 you invest in SPHD, you can expect over $4,000 per year in dividends. That's a significant return, especially when compared to other investment options. Those dividends are paid out monthly, providing a consistent stream of cash flow. This can be particularly beneficial for retirees or anyone looking for regular income. Keep in mind, SPHD has a slightly higher expense ratio, but the high dividend yield and low volatility make it worth considering. The stability and income it offers can outweigh the cost for many investors. Moving on to number 2, we've got the Global X Nasdaq 100 Covered Call ETF, or QYLD. This ETF is designed to provide investors with a unique blend of income and growth potential. QYLD invests in the Nasdaq 100, which includes some of the largest and most innovative companies in the world, and uses a strategy called covered call writing to enhance its income potential. This strategy can be particularly appealing for those looking to generate additional income from their investments. Basically, QYLD sells options contracts, called covered calls, on the stocks it holds. This means that for every stock in the portfolio, an option is sold to another investor, giving them the right to buy the stock at a predetermined price. Imagine you own a stock and believe it's going to stay within a certain price range for the next month. This is where the covered call strategy comes into play. You can sell a covered call option to someone else, giving them the right to buy your stock at a specific price, known as the strike price. This strategy can be a way to generate additional income from stocks you already own. In return for selling this option, you receive a premium payment up front. This premium can provide a steady stream of income, which is one of the main attractions of QYLD. If the stock price stays below the strike price, you keep the premium and your shares. This scenario allows you to benefit from the premium without having to sell your stock. If the stock price goes above the strike price, you sell your shares at the agreed-upon price, but you still get to keep the premium. This can be a win-win situation, as you benefit from both the premium and the sale of your stock at a higher price. QYLD tends to have a higher dividend yield compared to traditional index ETFs, currently yielding over 10%. This high yield can be very attractive for income-focused investors. The trade-off is that its price may not appreciate as much as a traditional Nasdaq 100 ETF over the long term. This is because the covered call strategy can limit the upside potential of the stocks in the portfolio. If you're looking for consistent monthly income, QYLD is worth a closer look. Its strategy of generating income through covered calls can provide a reliable source of cash flow. Just remember, options trading involves a certain level of risk, so it's important to understand how covered calls work before investing. Make sure to do your research and consider consulting with a financial advisor to see if this strategy aligns with your investment goals. And last but not least, coming in at number 3, we have the First Trust Morningstar Dividend Leaders Index ETF, ticker symbol FDL. This ETF invests in a diversified portfolio of US-listed stocks with a long and consistent history of paying dividends. We're talking blue-chip companies like Verizon, Pfizer, and Chevron. These are established businesses with strong track records and a commitment to dividend payments. FDL might not have the highest dividend yield, around 3.5%, but it offers stability and consistency. With a low expense ratio of just 0.45%, you're not giving up a huge chunk of your returns to fees. If you're looking for a set-it-and-forget-it ETF that provides a steady stream of monthly income, FDL is worth considering. It's an excellent choice for those who prefer a hands-off approach to investing. Over the long term, FDL has shown resilience and the ability to weather market fluctuations. This makes it a solid option for retirement planning and achieving long-term financial goals. Dividends play a crucial role in building wealth over time, and FDL's focus on dividend leaders ensures a reliable income stream. So, if you want a reliable, low-cost ETF that prioritizes dividend-paying stocks, FDL should be on your radar. So there you have it, my top 3 monthly dividend ETFs for building a steady income stream. Remember, diversification is key, so don't put all your eggs in one basket. Consider spreading your investments across different sectors and asset classes to minimize risk. If you enjoyed this video, hit that like button, subscribe to the channel, and hit that notification bell so you don't miss out on any future videos. Thanks for watching, and I'll see you in the next one. Whether you're a seasoned investor or just starting, these ETFs can provide a steady income stream to support your financial goals.